And good morning and welcome to the VSA Capital 5 Minute Morning Miner. It's Wednesday, it's December the 1st. You can all get your advent calendar out and open the first window. Paul, you got an advent calendar?
Yes, we have one. Yes, we do.
Very good. In my household, it seems to be the dog who has an advent calendar. Quite why, I don't know, but there you go. She seems to be quite happy to get a little treat this morning out of window number one. Um, and you're off to mine some money this morning, I think, Paul.
I sure am. Yes, it's going to be a good size event, I think, too. People are eager to see each other, and it is live.
Well, I hope nothing gets spread because I'm still suffering from this cold that I've picked up. And you just forget after sort of 2 years of not having any colds or anything, just how what a bloody nuisance they are. But there you go. Right, let's crack on with some mining news. Why don't we start off Atlantic Lithium, which obviously is spun out of Iron Ridge Resources. They've had some news this morning, haven't they, Paul?
Yes, they sure have. It's yet another resource increase for the Ewoyaa pegmatite lithium project near the coast there in Ghana. Now up to 21 million tons of 1.3% lithium oxide. They also make a point to show that the resource is based on 56,000 meters of drilling, but 28,000 meters of already completed drilling is not in that estimate, and that the deposit, even after the 28,000, still has more pegmatites to test, as well as extensions on known resources. So they'll get going again early part just after Christmas, I think, in 2022. Did want to flag up for investors too that now this is over 20 million tons, which puts it into the league of long life mines among spodumene potential deposits or mines. And I'm flagging up for investors too that now we have this deposit and Goulamina and Mali and Buguni, which is near Goulamina, and all three of these are or will be formally declared at over 20 million tons. So I think it's inevitable that one or more West African countries will, at some point, call upon miners to build a conversion plant in West Africa.
It does make an awful lot of sense, doesn't it? It's just a case of how they do it or whether they get to, how they get together, I suppose. Watch
Yes,
the space.
and just like the DRC has already done and Indonesia did with the nickel industry in Indonesia, I can't see these governments and these ministers allowing that added tax revenue to get away from them by not having a conversion plant there.
Yeah. Well, it does make an awful lot of sense, doesn't it?
Yeah.
Okay, what else you got for us this morning, Paul? Not much else on AIM, I don't think, but there's a few things going on around the world.
Well, we also had the announcement out from dual listed PIX Resources, the zircon mineral sands producer in Kalimantan. They formally announced the expansion of the Mandiri separation plant by another 6,000 tons per annum of production to 24,000 tons per annum. And what this does is it allows them to recover the titanium minerals as well in these sands, in addition to the zircon. And that's just a good value add on for PIX to further optimize the revenues from the deposit.
Okay, well, that's good news. Another VSA Capital client. What else, Paulie?
West African, the gold producer in Burkina Faso that's ASX listed, they have chosen to buy, as they announced initially in October, to buy the Kiaka gold deposit from B2 Gold, the TSX listed global gold producer. That deal has now closed, and it's a combination of cash and shares that works out to almost $100 million. So really good M&A activity. Kiaka is a very big bulk low-grade heap leach gold deposit.
Okay.
8 million ounces.
It's all going on in Africa, isn't it? As well as producing the Omicron, how we pronounce it, variant. They've got good mining going on.
Yeah, good mining activity underway, and it's really interesting that the capital to backing these projects is coming through time after time now, which is really kind of extraordinary times for the mining and junior mining industry in particular.
Yeah, it's quite interesting actually how, the whole mining industry is definitely booming up now, but that there are a lack of specialist mining funds in London. So many of them are shut down. We're having to find obviously money, which we are managing to do from either generalist funds or from sort of family offices and that sort of thing, who are taking much more interest in this space. And certainly, I think some of the larger companies that are looking to maybe look at exploration are just wondering the structure in which they should do that if they're already in production. I've had some interesting conversations with companies recently. It's a very interesting situation at the moment. I probably should say no more because I'll be saying things I shouldn't say. And probably shouldn't have said that in the first place. There you go. Right, moving rapidly on, because you've got to go to Mines and Money, and I should shut up. Anything else, Paul, or should we call it a day, though?
Just to say that First Cobalt, in their funding for the refinery restart at Cobalt, Ontario, they had closed the first tranche of just under $10 million. But because of all the institutional interest in this particular refinery, which was the only cobalt sulfate refinery for the battery sector in North America right now, they've upped the size of that offer by 7 times to 70 million.
Well, there you go. There clearly is. You see, as the demand, but it's that one's coming out of obviously North America, where they're perhaps a bit more switched on at the moment. But anyway, there you go. Very good, Paul. Have a good day at Mines and Money. Find some good companies for us and come and talk to us about them.
Very good. Will do.
Thanks, Paul.